2016, we think, will be characterized by a modest global recovery. Global growth should stand at around 3%, probably slightly more. The recovery is led by strong activity in industrialized countries. So in developed markets, growth is likely to accelerate slightly. In emerging markets, growth is also likely to improve, but this is mainly because in certain BRIC countries, the contraction will be less than in 2015. Therefore, overall, we see small improvement, but more accentuated in developed countries. On the growth side, we think that the cyclical recovery is likely to continue. It's a modest recovery, but it is a recovery. We see growth rates of about 1.5% this year. Obviously, the shock of January 15th, 2015 was quite strong. 1 franc out of 2 francs in Switzerland is earned by exports. Exports, obviously, with a much stronger exchange rate, are suffering and will continue to suffer. Overall, however, the impact is not as catastrophic as some people expected. We think GDP growth should accelerate slightly from about 0.8% in 2015 to slightly more than 1% in 2016. What is quite telling is the discrepancy between what is going on in exchange markets and in stock markets on the one side and in the real economy on the other side. Fundamentally, nothing has changed in China. Actually, when you look at the composite surveys that we've seen for December, things are improving, especially in the services sector, where current surveys point towards small acceleration actually in activity. That's the fundamental side. On the financial market side, obviously, there has been a lot of volatility, a lot of turbulence. We shouldn't forget that the Chinese authorities intervene and will continue to intervene to help stabilize the overall renminbi exchange rate, and will be successful in doing that. Our view on commodity prices overall is neutral. We think commodity prices are likely to stabilize. When we come to oil, we think it's really a supply and demand story. On the demand side, not much will change, even though we expect a slight improvement in demand. On the supply side, however, big changes are there. We have a potential new producer coming onto world oil markets, namely Iran. We have discordance inside OPEC. All these factors point towards quite strong, quite abundant supply, which should depress prices further. So overall, the global recovery is likely to continue. It's a modest recovery, but it's led by industrialized countries, by the US, by Europe, and by Japan, by certain emerging markets as well, like, for example, India and China, we think. The risks clearly to our outlook are twofold. On the one side, financial market turbulences in China and in emerging markets especially can cause significant problems and can impact confidence and therefore also possibly economic activity. Second risk we see is divergence in monetary policy, this asynchronous monetary policy where we have on the one side the US Federal Reserve and possibly the Bank of England that is likely to increase its little bit or further its hiking cycle. That's on the one side. On the other side, we see the ECB and the Bank of Japan potentially, and also the People Banks of China, for instance, going into a looser monetary policy territory. So overall, this divergence can lead to quite some turbulences this year.
Okay, great. Thank you very much.
Thank you.